Good day traders and investors, welcome to our new technical update that would cover some opportunities for the following week between the 25th and the 29th of December 2023. Have in mind that in the following week, because of the holidays, the market will be working with limited hours. Before we get started with today's update, I would like to tell you about our new, completely free Telegram channel on which we are publishing good trading setups and important market information. You can find the link down in the description. Now, let's get started with today's update. Let's quickly check what happened since the update from last week. Back there we discussed 4 setups. Couple of them produced very good movements. The USDJPY had a double bottom which produced a wonderful increase that gave more than 220 pips. The NZD-USD was forming a bull flag which went as expected and produced a movement of 94 pips. The US 500 was forming a potential double top, but as you can notice over here, this setup never broke the neckline, which means that it never gave an entry. So this setup didn't produce any movement according to the analysis. Finally, I want us to quickly check how gold developed. This is how the gold chart was looking last weekend on the 4-hour time frame. Back there we were discussing the possibility of the price to form an inverse head and shoulders. You can notice the first shoulder here, then the head, and we were within the formation of a potential second shoulder. Now here's what the price did after that. So you can notice that the price went up, tested the neckline, corrected a bit, and then it went up again, effectively breaking above this neckline. In the last day before the closure for the weekend, you can notice that the price started correcting. At this stage, the pattern itself is considered to be providing an entry. What you need to be looking for next week once the market opens is how this movement is going to develop. It is possible for the price to drop a bit lower and test the neckline, as this is something that inverse head and shoulders very often do. Around those levels, you need to be looking either for an indication for a bullish entry, or you also want to observe whether the price is still not going to break below the neckline. If it does that and breaks below this horizontal range over here, then the pattern can be invalidated. Let's now discuss 3 new setups that you can observe in the following week. The first setup that we are going to observe is a 4-hour chart on crude oil. First of all, you can notice that since the beginning of October, the price has been moving in a very obvious general downtrend channel. We have a well-defined downtrend resistance and a well-defined downtrend support. Just recently, after a rebound from this downtrend support, the price went up and currently again it's testing the downtrend resistance. If we zoom in on it, we are going to notice something important and interesting. We can notice that over here the price is forming a potential head and shoulders chart pattern. Down here, this orange line, let's change the color of it to red, is indicating where we have the neckline. In order for this pattern to produce an entry, you need the price to drop down and close effectively below the neckline. There's 3 extra confluences that you may want to look out for. The first one of them is the MACD indicator. The MACD already produced a bearish cross over here a bit after the head of the pattern formed. Now, as this second shoulder potentially forms and gives an entry, you want to look at the MACD whether the 2 lines are going to drop below the 0 line, which would indicate bearish continuation. The next thing you want to check is the Fibonacci. If you look at this last bearish swing over here and you stretch a Fibonacci accordingly, you can notice that right now this head and shoulders is forming right at the golden zone of the Fibonacci retracement levels. This is taken as an extra bearish confluence, especially if the price goes down and breaks below the neckline. But a couple of extra things that you may want to take in consideration would be, first, for more bearish certainty, you may want to wait and see the price breaking below this 0.382 Fibonacci. But also, in case the price bounces up and it closes effectively above the 0.618, this can invalidate the pattern and you can discard it. Finally, you can add exponential moving averages. You have the 20 and the 51st. Now, currently, they are below the price, which is indicating a bullish movement. But in case the price keeps on dropping, very soon both of them can be located above the price. If then they produce a cross, this can be taken as a further bearish confirmation. A thing to also observe is the 200 period, which you can notice is this green line over here that's currently aligning with the 0.618 Fibonacci retracement. In case the price goes up and breaks above the 0.618 Fibonacci, it would also most likely break above the 200 exponential moving average, which would be a further indication for invalidating the pattern. For our next setup, we're looking on a 1 hour chart for USDJPY. Now, we did give a setup on this currency pair last week, which was this double bottom indicated right over here. This pattern produced a beautiful increase that gave 220 pips of a bullish movement. Now, since then, the price has been dropping down, and over here again it encountered the support range that we were taking for our previous setup. And if you give it a closer check, you're going to notice that currently right over here the price is again forming a potential double bottom chart pattern. Now, what we've been having just before the closure was a temporary breakout above it and some correction again below it. It's very important to see how the price is going to act exactly on the opening on Monday. If the price starts reversing and breaks again effectively above the neckline, then this can be taken as an entry for this trade. If, however, the price keeps on dropping lower and drops below halfway through the pattern, then this can invalidate it. 3 extra things to look out for as a confluence. First, you can notice that over here we have a Fibonacci. This Fibonacci is stretched based on the last bullish swing from the previous double bottom up to the high point that it reached. You can notice that over here the prices dropped to the 0.786 retracement level. Let's remove the Fibonacci for a moment. So also you are having 3 exponential moving averages. Right now the price is fluctuating between the 20 and the 50. In case it goes up and effectively breaks the neckline, then both the 20 and the 50 can find themselves below the price. What you are looking for then is a cross. If the two cross, this is a further bullish indication. Finally, if you look at the MACD indicator, you can notice that it produced its bullish crossing down over here, and since then the two lines have been climbing. Observe a possible situation where both the MACD line and the signal line cross above the zero line. If this happens, this is yet another confirmation of bullish continuation. For our final setup today, we're looking on a 1 hour chart for EURJPY. You can notice that for a while now, since the middle of November, the price has been moving in a general downtrend. But since over here, around the middle of December, the general trend started reversing according to the market structure, and we got a serious confirmation for that around the 19th of December. If we zoom in on it, you can notice that over here the price produced an upswing, then a drop that produced a new major low higher than the previous one, and then the third swing, again a bullish swing, produced a new major high point. This is a 3-swing confirmation of a possible beginning of a general bull trend. Since then, the price has produced a correction to the downside, and in the last few days the price has been bombarding the support range created from the previous major high point. At this level you can notice that the price has been forming a very obvious inverse head and shoulders chart pattern, and it closed just before the weekend over here in this neckline resistance range. The main thing that we are looking for over here is obviously for the price to produce an effective breakout and close above this neckline resistance range. Additional confluences that you can observe, first one of them would be the MACD indicator. You can notice that just before the market closure, both of the lines crossed over here above the zero line, which is taken as a bullish continuation. This would be particularly valid in case the price produces a breakout to the upside in the first few hours of the market opening. The next thing to observe would be the moving averages. If we go ahead and we place simple moving averages 20 and 50, you can notice that right over here both of them went below the price and the 20 went above the 50, which is a bullish cross. If we add the 200 period simple moving average, then we're getting a further confirmation, as currently we're having a proper alignment for a general bullish movement. You have the price below it the 20, below it the 50, and below it the 200, and some distance between each of them. The final thing to consider over here is placing the Fibonacci retracement levels. If we stretch them like that on this last general bullish upswing that we have over here, you can notice that the price encountered the support range right in the golden zone of the Fibonacci retracement levels. I hope that you've enjoyed this update and that you find it useful in the following days. Subscribe to our channel if you would like to receive notifications whenever we publish a new market update or any essential educational content. Additionally, let us know down in the comments what you think on this update and whether you have any different takes on these setups. You can also subscribe to our social media profiles. You'll find links towards our Instagram profile and TikTok profile down in the description. Finally, I'm reminding you to join our new free Telegram channel on which we are sharing high potential trading setups and important market information. I'll see you next time.